Obviously, the US isn't going to be open. Did that play much of a role in terms of volumes and so forth?
Absolutely. It was a very quiet day on the Australian share market. We're going to see both the US market and the UK market close for a holiday tonight. So markets all around the region saw very light volumes going through and also high volatility because of the light volumes. Last week on the Australian market, it was a negative one. We were down by 1% for the week, and that was mainly driven by the negative sentiment surrounding the banks. Today, that trend continued. We saw the big four banks trading lower, and I guess some of the concerns surrounding the banks at the moment are the European debt worries and the impact that may have on funding costs. We've seen China PMI numbers starting to slow, so the impact that may have on the Australian economy, and also the housing market here domestically looking softer. So those concerns continue to dominate trading in those big four banks. Outside of the big four, we saw a little bit of strength coming through on commodities, although by the end of the session that had mostly faded. But we also saw a little bit of news coming through in terms of the material sector. We saw Oz Minerals with its reconstruction as of today, a 10-for-1 merger. So if we have a look at its shares, investors would have noted the higher share price, and that's really because Oz Minerals looking to have the number of shares that it has on issue similar with some of its peers. We also saw Sundance, one of the best performers on the market, up by almost 10%. Some takeover speculation there, although Sundance coming out to try and hose down the speculation going on in the market. The Australian Financial Review having an article saying that perhaps Hanlon could be interested in a possible takeover. We know that Sundance is looking for a joint venture partner in its project in Africa, and that's leading to quite a bit of takeover speculation around this.
End of the tunnel, it seems the only times we see at the moment upward trajectory in a lot of the share price movements of the banks is when they just get so beaten down they become irresistible value.
They are good value at the moment, and I guess dividend yields make the banks an attractive play. But if you have a look at their underlying business, some very key headwinds in terms of the asset quality of their portfolio because of the softer housing market that we're seeing. We're also seeing slower lending growth as well, and that remains a key concern. So then you have to ask yourself, where is the growth from the banks going to come from? We're in a multi-speed economy here in Australia, so outside of resources, looking very much like a recession in other parts of the economy. So in terms of the underlying business of the banks, where is the growth going to come from? And I guess the market really doubting the growth or the potential growth the next couple of years for the banks, because things do look like they are slowing down here in Australia in terms of the housing market and in terms of lending growth and in terms of the economy outside of resources. And then you have a look at China as well, and if you have a look at some of those PMI numbers really starting to show slowing growth, so concerns over the link between China and Australia and the impact that may have on banks as well. Of course, it does take a while till till prices fall to a level that's attractive enough for bargain hunters to scoop in, but unfortunately that's not the case today. We are still seeing the market very much focused on the headwinds that the big four banks are facing.
David, it seems an astonishing economic data coming out this week, really from all over the place. We get some important numbers out of China, data out of the US, data out of Europe. Do you think that's going to be another factor that's going to, I suppose, be front and centre of the mind of investors through the week?
I think there's a growing sense of nervousness around the numbers coming out of especially the US economy, but also out of China. And this week's going to be an important one in terms of those numbers, especially manufacturing numbers. We've seen manufacturing numbers now seeing a slowing trend coming out of China, the US and Europe. And we'll get readings on ISM as well as PMI numbers out of all of these three different areas. So the market's going to be watching this very closely. In terms of the US, the ISM manufacturing numbers, if we do see a reading below 60, which is highly likely, I think that's going to add to nervousness on the US market that the correction that we're seeing in the US market may be a little bit deeper. Remember, the US market has only corrected around about 3% for the month, whereas the Australian market, from the peak to the trough, we've corrected about 7.8% so far. It's also an important week in terms of the Australian market. On Wednesday, we will get first quarter GDP numbers. We saw first quarter company profit numbers today, and we saw it down by 2%, and the market was expecting to see an increase of 1.8%. So those first quarter GDP GDP numbers are going to be watched very closely. We know that there's going to be an impact from the Queensland floods and the Victorian floods that we saw in that first quarter. So a contraction of 0.3% is expected, and we haven't seen a contraction in GDP numbers since the December quarter of 2008. Of course, a bounce back is expected, so I guess Thursday's numbers are going to be important, where we get a reading on retail sales for the month of April. And we know the retailers have been trading near two-year lows, so those numbers are going to be very important to get a gauge of whether the Australian economy is looking stronger or weaker than what the market's expecting.